Howdy, friends. It's Steve AI from the mind of Steve Depoe, realtor with the Rose Realty team, your trusted advisor. With this week's installment of Texas Real Estate Planning Today. Today's topic, the asset performance test, is your property underperforming. I'm Steve Depoe, realtor with the Rose Realty team here in Denton County, Texas. Let me ask you a tough question. If your property was a stock, would you buy it again today? If your answer isn't a solid yes, this video's for you. I work with local homeowners, landlords, and investors who want to know if their real estate is truly pulling its weight. And today we're going to walk through what I call the asset performance test, a no-nonsense way to evaluate whether your property is helping or hurting your financial future. You'll learn how to spot underperformance, how to fix it, and when it might be time to pivot. Let's dive in. First, let's talk about ROI, the return on investment. Most people think of this as rent minus expenses, but I want you to think bigger. Are you also factoring in appreciation, tax benefits, and opportunity cost? For example, if you're sitting on $200,000 in equity and making just $400 a month in cash flow, that's a 2.4% annual return on that equity, not including headaches or vacancies. That's not exactly working smart, Yahoo. Second, evaluate tenant stability. If you're constantly chasing late rent, fixing preventable issues, or dealing with turnover, your time is getting drained. Good tenants are part of your asset's performance too. If you've had more than one turnover in the past 18 months, your asset may be signaling trouble. Now, maybe you're holding on to a property for appreciation. That's fair. But here in Denton County, the market is shifting. We've seen steady growth, but the days of double-digit annual increases may be behind us for a bit. If you're banking on appreciation to make up for weak cash flow, we need to talk. Third, have you optimized your property's income potential? This means market rate rent, low vacancy, and lean expenses. It also includes things like energy upgrades, tax protests, or refinancing options. You wouldn't ignore a leaky faucet, right? So don't ignore a leaky balance sheet. Finally, think about opportunity cost. If your money or your time could be better used in another property, city, or investment vehicle, then this current asset might be holding you back. In Denton County, I work with homeowners every day who are surprised to find that the house they've owned for years is actually underperforming. Sometimes it's a minor fix, a rental price adjustment, a vendor change, or even a cosmetic update. Other times it's a sign to sell and move those gains into a more productive vehicle, like a 1031 exchange into a multi-unit property or a cash-flowing neighborhood. Bottom line, your property should serve your goals, not the other way around. If you're curious about how your asset stacks up, let's talk. I'll help you run the numbers, spot the red flags, and decide the best move. I'm Steve Depoe with the Rose Realty team here in Denton County, and I'd be honored to help you maximize your home or investment. Let's talk soon. Until next week, when our topic for real estate planning today will be how to increase cash flow without buying more real estate. I'm Steve Depoe. Please wait 2 seconds for my contact information.